Salesforce Price Targets Surge. The star of yesterday afternoon is cloud computing pioneer Salesforce.com CRM, which has held on to some of its gains from last night, up $3.65, or 3%, to $130.53, after it reported fiscal Q1 revenue and profit that comfortably beat expectations, beat with its quarterly revenue outlook for this year, and also raised the year outlook for revenue and profit above consensus. No ratings changes today, that I can see, but price targets are zooming into the $150 range. One of the most bullish notes today comes from Brad Zelnick of Credit Suisse, who sums up the report as a swift kick in the year. He reiterates his price target to $155 from $150, after concluding that the company remains well on track to achieve its $21 billion to $23 billion revenue goal in 2022. Zelnick likes the indicators for the company's ecosystem metrics. Salesforce reports such as its Einstein software for artificial intelligence doubling to nearly 2 billion predictions per day versus last QTR, and Salesforce's partners helping to generate 59% of new biz and 75% of largest deals. Mixed feelings about HP. Shares of PC and printer titan HPQ, are up 84 cents, or 4%, at $22.15, after the company yesterday afternoon beat the street's revenue expectation for its fiscal Q2, and raised the year profit outlook. Price targets are pretty much staying put, although there was one upgrade this morning, so far, from Nihal Chokshi of Maxim Group, who raised his rating on the shares to buy from hold, and raised the price target to $28 from $27. Chokshi is satisfied with what looks to him to be a sustainable single-digit revenue growth rate for the company's highly profitable supplies business in printing. Plus, he likes the optionality of the company's relatively new 3D printing business, which can ultimately achieve profit that is 5 times as high as it is now by reducing costs over many years. However, there is a lot of caution this morning from those maintaining the equivalent of a hold rating. For example, Tim Long of BMO Capital maintains a market perform rating and cuts his price target $1 to $21. Long writes that in PCs, though HP has managed to maintain share leadership and improved margins with better pricing, he is concerned because we believe average selling price growth will moderate over time. As for printers, we are positive on some of the long-term opportunities in printing, but remain on the sidelines given secular headwinds in both end markets. Apple's gloomy outlook. Chokshi of Maxim was busy this morning. He also went the opposite way on Apple AAPL, cutting his rating on the shares to hold from buy, after concluding 2019 will be a down year for the company, as it will probably lose market share with the iPhone, which will have only marginal upgrades. He cut his estimates for fiscal 2019 iPhone sales to 208 million units from 223 million modeled previously. That cuts his revenue estimate to $258 billion, below the consensus estimate of $272 billion. Chokshi is also concerned about Apple services business. He thinks things such as Apple Music and other paid services will get at best a 30% attach rate to the iPhone, maybe much less for some of the services. And the operating profit margin for the services may not rise above the company average of 25%. Thus, while it may actually reach $52 billion by 2022, he sees less of a payoff from these services than people think. Smartphones lackluster outlook. Speaking of smartphones, research firm IDC this morning offers its latest thinking on the market. Firm expects total smartphone unit sales to drop a fraction of a percent this year, to 1.462 billion units, before growing 3% per year starting next year, a compounded annual growth rate of 2.5% through 2022. The biggest thorn in the side of the market is China, whose consumption is going to drop 7.1% this year, IDC predicts. That's in contrast to India, where sales are rising 14% and 16% this year and next, respectively. Weston Twigg of KeyBank this morning updates his estimates for the memory chip market, predicting prices of DRAM will remain strong for a while, as DRAM supply looks rational through 2019, but NAND flash chips are another story. 3D NAND supply is still coming on at a relatively high rate, he writes, estimating 47% NAND bit growth this year, and 41% bit growth in 2019. That means prices will decline through the end of the year, but maybe not as fast as the first half of the year. He predicts demand for NAND should increase amid soft pricing, potentially limiting the rate of decline as devices and SSDs, solid-state drives, are loaded with more NAND. That should be positive for Micron Technology, whose shares Twigg rates overweight, and a neutral thing overall for Western Digital, WDC, which unlike Micron doesn't sell DRAM. Shares of Micron are up 92 cents, or 1.5%, to $63.54, while Western is up 45 cents, or 0.5%, to $86.94. Sign up to review. Every evening we'll review the news that moved markets during the day and look ahead to what it means for your portfolio in the morning.